Hello and good morning, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook at GDMFX Europe. Starting with the coverage of North American markets, the Dow yesterday 17 points range closed on a positive 5 points. The Nasdaq 80 points range closed on a positive 36. The DIX is down though to 97.70 from 98.30 yesterday's reading at the same time. Mortgage application with severe increase from 0.8% up to 4.7% yesterday's report show. ADP employment change for July worse than expected and worse than previous to 185,000 from 230,000. Trade balance previous minus 41 billion expected to decline to minus 42.7, but the actual is 43.8. Positive reports for the Services and Manufacturing PMI reports, as well as the ISM Non Manufacturing PMI, which was the report who lowered the US dollar versus its rivals, namely the pound, the loonie, and the yen, where the trend reached 2 months high. Canada exports rose to 44.6 billion from 41.9 previous. Imports lowered a little, while the International Merchandise Trade Report reported minus $500 million from minus almost 3 previous. The Canadian dollar rose after official data showed Canada's trade deficit shrunk to $480 million, a much stronger reading than economists had expected. Rising crude oil prices also supported the loonie. Initial and continuous jobless claims along with challenger job cuts are due today. Tomorrow, unemployment rate and NFP, labor force participation, average hourly earnings month on month and year on year, which is important, average weekly hours and consumer credit change, and for Canada, unemployment rate and net change in unemployment, building permits, and IV's Purchasing Managers Indexes are due tomorrow. All eyes on North America is tomorrow. European markets, the DAX and the CAC both went up yesterday, 100 points for the German, 70 points for the French market. The EU Market Services PMI came better than expected, just a little bit, and the German Market Service PMI also. The French came out as expected at 50.52, and Italian came out lower than expected. The European retail sales declined year on year, 1.2% from 2.6, and month on month, again a little bit up. Germany factory orders year on year, 7.2% from 4.5. Prime Minister Alexis Tsipras said on Wednesday that Greece was close to concluding a deal with lenders on a multi-billion euro bailout, which he said would end doubts over its place in the Eurozone. Both sides have said such a deal is possible, although the European Commission described the target as ambitious, suggesting much remains to be done. Today, European, Germany, France, Italy Services PMI reports. There's some inflation data coming from Switzerland, CPI, and also European retail sales reports. Moving to the UK markets, today is the British day. Yesterday, the FTSE 100 moved up to a total of 47 points and closed at 66.74. Market Services PMI for July, slight decline. Basically, the hopes for Chinese economy improvement lifted the UK mining sector and brought the FTSE 100 up as several mining companies got a big rise on their share prices. Meanwhile, UK services rose less than expected and in fact moved to their slowest pace since March 2014 due to expectations of at least 2 or even 3 NPC members to vote for an interest rate hike. The sterling gained strength against all of its major peers. The pound, as I said, gained over 10 points over its major rivals. Today, we have a speech from Mr. Carney. We have the quarterly inflation report, which is a very, very important event. Interest rate decision, no changes expected there. Asset purchase facility reports, quite an important report. And we have the nice year gross domestic product estimate quarterly for July. We also have a few Tier 2 events, which I would also consider quite important. Industrial production year on year, and also the Bank of England minutes. Moving to the Asian Pacific markets, starting with the Nikkei 225, 355 range yesterday, 255 points up, open with a 40 points gap today, and is at 120 points down already. Foreign bond investment indicated capital inflow with 146 billion yen positive difference from previous reading. We also had the foreign investment in Japan stocks, again positive difference from the previous readings. Leading economic index for June came out slightly higher than previous with 1 point and now is at 107.2. Coincident index came out higher than previous with 1.8 points and is now at 112. Tomorrow, we're looking for the monetary policy statement, and also the Bank of Japan Governor, Mr. Kuroda, will have his speech on Saturday. We have the exports, imports, and trade balance reports for China. Very, very important. On the Pacific front, unemployment rate in Australia slightly up from 6 to 6.3%. Also decline in the part-time and full-time employment. However, employment changes and participation rate came way better than the expectations. Australia added almost 4 times the number of jobs predicted in July. The news failed to boost the currency as concerns remain about the data's volatility. Unemployment jumped as a rise in the number of people entering the labor market exceeded new hires. Australia is facing the effects of a fall in prices for its key commodity exports, led by, of course, the iron ore. The central bank, which cut rates twice this year to 2% currently, is banking on a lower currency to help a transition to industries outside mining. So the bottom line is that Australia is creating working positions which cannot meet the excess of labor supply. If the participation rate had not increased, the Australian dollar would not have dropped. Australia and New Zealand Banking Group Limited is raising a $3 billion in capital to make Australian banks safer by selling shares worth at $2.5 billion to institutions. The raising will allow ANZ to more quickly and efficiently accommodate additional capital requirements recently imposed on the banking sector. The regulatory changes are done particularly in relation to Australian mortgages, as the loans for home purchases have increased. As we know, we have a little bit of a concern in the property market there due to high prices. The AUD performance of construction index is due today, and tomorrow new home loans. Moving to the commodities sector, starting with the S&P 500 index, which had a range of 24 points, currently up at almost 2,100. Crude oil stock exchange, the inventories fell by 4.4 million barrels in the week ended July 31st. Oil extended gains after the data was released, very slightly. Gold eased on Wednesday, hovering above the recent 5.5-year low on earlier pressure from the dollar as U.S. services sector data revived expectations of a U.S. interest rate rise. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers.